All right, it's time for another end of day post wave report with yours truly, the Algo Capitalist. We have had some interesting days in these markets. So we're going to jump right into it and take a look at what the Algo charts have to say about all this increased volatility. We're going to start off with the E-mini S&P 500. All right, so as you can see, this market is still doing its thing, is it not? You're still trading inside of the bar from September the 23rd. It's a pretty wide trading range, so it makes it appear and look like every day, oh, we're having these big moves in the market, but the market's not going anywhere. It's moving sideways. This is 1, 2, 3, 4. Today is the 5th sideways day, where the bulls are able to keep the market floating here, all right, but not gaining any real ground. So a big push should be forthcoming, and it should be like this at the overhead trendline resistance, or get just slightly above it and collapse. But I think 1800 is the max if the market can even get there. This bearish pointer back here is a monster, and it does need to be reconciled at some point, and this is from August the 9th. All right, this bearish pointer is massive. I think that is pretty much still the market's fate at this point in time. So even though the bulls have it for now, if you look at it, you really haven't gotten any additional upside production from the rally alert buy signal. So this is one of those where you have to protect yourself, protect your capital, and you're going to need to be nimble and follow the PulseWave report, follow the dashboard, and use the pot method. Taking a look now, let's take a look at gold. All right, this is the gold. This is GLD. Okay, this tracks with the gold futures contract. So as you can see, you're in the red zone. You had a rally alert buy signal. This chart mimics the S&P to a T. Look at this, 5 days of sideways trading as well. Except for this one, it's more bearish than the S&P because you're below both the trendline resistance and the bottom of the Kumo cloud. So this one has very strong overhead resistance. In other words, if gold can pop above this, it will probably run and run heavy. That should be noted, ladies and gentlemen. All right. The top side run could be a very strong one if you get enough momentum behind it. However, this one is looking like it's not going to be able to get up. You got the bottom of the Kumo cloud and the trendline resistance and the top of the Kumo cloud. You got this area right here, this space, this void of resistance from $165 all the way up to like $167 of pure solid resistance, where this market could fail and could fail radically. But just like I said, this one, if it gets over it though, if it gets over it to the top of the Kumo cloud there, this one has all the potential in the world to run crazy. All right, so that's on the GLD side. Okay, sticking with gold here just for a minute. Let's take a look at. We saw the gold futures. That's GDLD. Let's look at GDX. All right, look at your gold miners. Take a look here. Now the gold miners is moving different. It's not parallel with gold futures or with the GLD at the moment. It's kind of doing its own thing. It's trying to get up to the overhead trendline resistance. We'll call it 41.5. All right, so it's trying to get to 41.5. But the bottom of the Kumo cloud and the overhead trendline resistance area right here, this zone, it's going to give this one problems. From 4150 to 42 is going to be a air pocket of very powerful resistance for the GLD. I'm sorry, for GDXJ. So the gold miners here have it a little bit better than the gold futures and GLD for the time being, but not by much. You've had this straight up continuation of upside production from the rally alert buy signal from September the 30th, which is good, which is great, and it has all the hope in the world. But just like the last rallies that we had here, you know, they always end in failure with the bears coming in and knocking it down. So I think a wash, rinse, repeat is coming. The next crash alert sell signal should appear by the trendline resistance, and the next leg down could be a rather steep one, and this could put GDXJ to the low 30s, maybe even the high 20s. So just something to look at as we're moving forward. All right, let's take a look at the Russell My Hustle. All right, so this one is ticker IWM. This is the ETF that tracks with the Russell. You'll see it's all spotty up in here. You're still in the red zone. However, you got above the trend line support today, right? And you're above the Kumo cloud. But you're in a corrective space, just like you were back here. You're in a corrective space. Market's trying to get up and go. But so far, we got lower highs, right? So we have to take a look at that. This here is a bearish pointer, and it hasn't truly been tested and taken out yet. So we'll wait and see what happens there. But this bearish pointer is pretty telling. Right now, the bulls are trying to do a little something. This was your rally alert buy signal. The last one was on October the 1st, and now you're getting a little bit upside production, but then the market's pulling back a little bit. So, you know, this is one of those things that's zigzagging around, which means that it's a true battle up here. Every rally is getting sold by the bears, but then every pullback is being bid back up by the bulls. So this one is, the range is trying to narrow enough to build up enough energy to pop. So you got this sideways movement here, and the market's trying to pop. So this bar here from September the 28th could end up being the consolidation congestion area moving forward, and it's going to be very difficult for the Russell to pop out of that zone. All right, what about real estate? What is real estate doing in all this? Well, let's take a look at ticker IYR, which tracks the real estate. Okay, this is an ETF. So we had the crash alert sell signal from September the 7th, got all this massive downside production. Then the rally alert came, got no upside production. All of a sudden, market breaks, then pulls back to here. So you're out of the correction zone, and now the market's ready from after this correction. It looks like it's ready, trying to bounce. It's going to have to find a support somewhere here, though. And because the Kumo cloud is arcing up, we should be able to get back above the overhead trend line resistance and run from there, and at least get back up to around maybe near the top of the Kumo cloud. We'll call it $107.50. So we'll call it 107.50. That should be the target for this one here. We'll see what happens. We'll have to watch it and see, but that's kind of where we are right now. Just the beginning stages there. All right, what about all this talk about what's going on in the energies? Well, here's a look at oil. All right, so we had the crash alert sell signal. We got this downside production, a rally into the close, which made a bearish pointer, which means, as you already know, we got to come down and reconcile this one. And this is just day one. You got immediate downside production. I think another day down is coming. I think the trend line support around $72 mark is in play on this one here. So just something to watch. All right, next up, we'll look at OIH, which tracks the crude oil futures. This ETF right here is now flip-flopped. So you had the crash alert sell signal, you got no downside production today, and instead of flip-flop for rally alert buy signal. So this one is flip-flopping from the crude oil futures. All right, now one thing to keep in mind is the OA is any ETF that follows and tracks the futures contract. All right, you have to keep in mind that, crude oil futures contracts, any futures contracts, they have expiration dates, and sometimes they can have backwardation, they can have contango. You can have your front months higher than the back months, or the back months higher than the front months. So it just depends on what's going on in that futures contract. That's why sometimes you'll see the deviation from the ETF from the futures at times, especially doing contract rollover. All right. So we got the flip-floppage. All right. So we don't have a clear signal per se, but you gotta take what you got. So you got a rally alert buy signal. This one's going to try to pop. So we'll see if the tail's wagging the dog. Maybe the OIH is going to help to push the crude oil futures up, or vice versa. Very interesting, though, when you see things like this. Okay, so got to keep your eyes open. Follow the PulseWave reports. I think you'll be fine. All right, moving along. Let's take a look at what silver is doing. We already looked at gold. Now let's take a look at the silver complex. Here's the silver futures. You're in the red zone, and you're still under correction. All right. You did not overcome it. You had the rally alert buy signal. You got some nice little upside production. Then you got the crash alert, immediate downside production, reversing and flattening out. So this is the position now of your silver. The bears are temporarily taking control, even though we don't see too much commitment to the downside. So we see some selling, but apparently there's a little bit more buying at the moment than the selling, but the selling is keeping the market flat right now. So this is a tug of war that's going on. Who will win out? We'll have to wait and see, but that's why you got the PulseWave reports. Flipping over to the SLV, the ETF that tracks the silver futures, and you see an identical price action. Identical price action. Had the rally alert buy signal, upside production, flip-flop into the crash alert, got a little bit of downside, and now you're just flatlining here. So it is tracking with the silver futures pretty much tick for tick. All right, let's take a look at the monster in the room, the monster. Let's look at the tech sector. Let's look at the QQQ. So the QQQ is the ETF that tracks the NASDAQ 100 futures, and you can see here the market was under pretty extreme corrective phase. Now that corrective phase seems to have stopped. Word of caution: the market stopped short at the overhead trendline resistance on the day before pulling back and falling into the close. You're smack dab in the middle of the Kumo cloud, and now the overhead trendline resistance is still there. It's going to take almost a miracle to get enough momentum to make this thing pop, and you've created a gap up on the day. It's going to need to be back and filled maybe tomorrow, but at some point it's going to have to be. If the market were to jump higher, it still needs to come down and deal with this. So this is coming. More pullback is coming. The market may find support at the bottom of the Kumo cloud, though, and that's going to be around the three. We'll call it. I want to say. Let's call it maybe 361 ish. Well, all right, we'll say that. We'll say 361. All right, we'll call it that. Between 361 and 357, I think is where the market will try to find support before the bulls try to bid it back up again. All right, next on the radar, we have the S&P 500. That's the ticker SPY. It tracks the E-mini S&P 500 futures. Similar chart action. Price action the same. You got the gap up. You rally. got above the overhead trend line resistance before closing back down and crashing into the close, but you got this gap that needs to be contended with. Same technical analysis as the NASDAQ, except for this Kumo cloud is a lot wider. So support can be found around the $430 mark. That's how far this one has back more to pull back. So it can drop another $8, and technically the bulls can still hold and keep this somewhat levitated. All right, just going into it, understanding the increase in the volatility. All right, what about the bond market? Well, taking a look at the ETF TLT, you can see price action has broken down here. The crash alert sell signal from September the 23rd is still producing downside. You had this sideways action for several days, and then you finally had the breakdown. So this one has fallen overboard, man overboard. It's fallen off of the cliff, and price action is still falling with no bottom in sight, which means yields have no choice but to move higher. What about jumping back to the energy market for a second? What's going on within that gas? Well, here is your chart here. You see we have a rally alert buy signal for tonight into tomorrow's trading. All right, this one's been flip-flopping up here around this point. So this is usually where you're building, you're topping out basically. This has been a tremendous run. The bulls, believe it or not, still have this thing on lock. You know, the bears come in and sell the highs, but the bulls keep the market afloat. We're not seeing follow through downside. Just a lot of flip-floppage and sideways market action. With this bar here, the September the 28th being the trading range that the market price action is pretty much sticking to. So this one just needs to break out of the range and find out what it wants to do. Maybe the bulls can get enough momentum behind them and push the price higher this time. We'll see. But looking at the counterpart, the ETF that tracks the natural gas futures, ticker UNG, is pretty much the same thing, identical. UNG seems to be tracking pretty well with the futures counterpart. So we do have to talk about an interesting thing here, though, is that you have this gap. You created a gap on October the 6th. So up here, you see the market, closed good, and then it opened way down here. All right, huge pullback, and then you got to here. So we got a rally alert for tomorrow on the UNG, on the nat gas, and the bulls are still keeping this one afloat. You're just having this breakdown up here near these highs. So we could be nearing a possible market top, and you start seeing this kind of gobbledygook up here at these levels. We'll see. The bulls still have everything in their favor, though. They can really push this one back up. So we'll have to watch it and see. UNG. All right, let's take a look now at the US dollar. This is what the dollar is doing. So you had a crash alert sell signal, got that initial downside production, which was nice. Market kind of dead cat bounced all the way back up and then fell back and now moving sideways with a bullish pointer right here. But nonetheless, you're still inside of the auspice of the crash alert. So the bears are keeping this one at bay right now. Just a lot of volatility coming into play. You are in the green zone, though, so the market can rally. It can bounce and rally and lock back in at any moment if the bears cannot get some significant headway. One note of caution on this chart. You have a gap created on September the 19th that needs to be reconciled. So we know this dollar is coming down. Therefore, I have to call it for the trend line support. I think the market is eyeing the trend line support. I think $92 going back down to the 92 handle is in play for the US dollar index. That will be a 2-point drop from where it is now at the 94 handle. All right, let's see. Let's take a look now at the euro dollar. Take a look at that. Go ahead and step into the forex room for a minute. All right, so you can see here We did get another leg down. This market's still under a locked in bear market right now. This bear market is locked in. All right. I see more downside coming until this thing stops falling. The bears got this one on lock. Next up, we got Bitcoin. Let's take a look at the Bitcoin. All right, so this is the Bitcoin futures. As you can see here, we have a crash alert sell signal for tonight into tomorrow's trading, with the trend line support at 45,000 in play as an initial target on the pullback. So red alert for you on that one. What about GBTC, which is the ETF that tracks the Bitcoin? You can see here we got a crash alert sell signal there as well. All right. And we do have a gap way down here that needs to be reconciled. So I see this one pulling back rather swiftly as well. Trend line support is definitely in play for this one. And you do have a little gap here that was created on the rally alert buy signal of September the 30th. So yeah, I think this one, I think you got some pullback coming for sure on this one. Let me just double check another thing here. This is 7. Okay. Okay, so this gap has not been satisfied. On the GBTC ticker, we have a gap created on September the 26th, which means that you can see prices drop below $31.37. All right, so $31.37 is in play, ladies and gentlemen. And I got to call it from this pullback status right here. We could be looking at the temporary top again in Bitcoin. Why do I say that? Well, I've been telling you that the resistance zone is from 50 to 55,000. That's your sideways bar. And I think that's where the market will probably just like drift and hang out probably up until the end of the year. You know what I mean? Just something to watch for. I gave you that. I told you that, weeks and weeks way before the market even got there. So just something to think about. That's why you need the PulseWave report, because the PulseWave report goes way into more depth than what I can do here in these videos. It tells you when to buy, when to sell, when not to buy, when not to sell, if the market's in play or not, where the bias is in the market, what side should you be looking to trade, gives you specific price points to enter and exit markets, and where to place your stops, and how to move the stops, how to move and lock in profit with the market, all that good stuff. How to capture, entire moves, entire trends. We shoot for daily and weekly bars here. We don't do any intraday day trading. We're not scalping for ticks. All right, we're trying to capture the entire move for a year, if that's possible. If the market's trending up or down for a year, we want all of that, and that's what we shoot for here. So we show you how to lock in profits along the way, take profits along the way. We show you how to really take your investing to the next level. Doesn't matter if you're a gold and silver coin stacker. Doesn't matter. Doesn't matter if you hold some cryptos in a wallet somewhere. Doesn't matter. We show you how to maximize your profit potential in your investing. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Smash that like button. What up, Thomas? Peace. Thanks, man. Yeah, hey, man, you guys got to check out the Discord. If you missed that Discord today, I don't know what to tell you. Those are not recorded. Those are lives that we do, weekly lives that we do with our pulse waivers, and we open the doors to let the public come in and listen on those. We can't post them on social media because they'll just take them down and ban us. So we do it on Discord, man. So whenever we announce that, if you want to get a link to get in there, the best way to do is to go on pulsewavetrading.com when we announce that we're going to be doing one, and the links are provided there. Sometimes Frank, if he remembers, will put a link in the description of the video that we do here on YouTube, letting you know, okay, we're about to take this party on over to Discord. Then you click the link, and it's timed, so it's not just forever. It's a timed link. It does expire. If you get in, you get in. I know there's room limitations, so basically first come, first serve, and that's just how we give it up. All right, with that being said, I'm out. Peace.